All right. Let's get it started again here. This is a privilege to talk about war stories. And having survived 20 years in markets, I can't believe it's 20 years. I look back, think about 2006. I started before that, really 2004, so 22 years. That's a lot. But a lot of it feels like yesterday. So there's a lot. I get to talk a little bit about some nostalgia here. We talked about these 3 reasons to make a trade, talk about all these lessons, these pitfalls. And so I'm going to try to tie it back together in this presentation, talk about some things that happened. A lot of these are going to be really big events that you know, some that you don't know, and I'll talk about them and sort of the lessons and, the ideas for you as a trader to learn some of the lessons that I learned, or at least to remember some of these stories. We remember a lot of things in story. Right? I think that's like what the Bible is, right? It's just told a whole bunch of stories because people don't really remember just a bunch of rules. They'll remember stories. So I've given you the rules, and now I'm going to talk about the stories. And a lot of times, or sometimes, it shows that the rules, sometimes you have to bend the rules a little bit, but be careful about that. So the pain, the pitfalls, the profits. And that's probably in order. There's pain, there's pitfalls, there's profits. So we'll talk about me. 2004, Forex Live, Investing Live. Touched on it before, but I don't have many years left in this business. I've been through the wars, and I've come out of it way ahead. And it takes a toll to make it in markets, and I have. And I've been very, very lucky. That's why I'm sharing these stories. You're going to meet a lot of people here in this industry, especially. They're the most incredible liars in the world. And you can tell because they have no humility. Anybody who's really been in markets for a long time has a lot of humility. I hope I do too. But I have to sell myself here for a moment. I've done it. And I don't think I'm going to be telling too many war stories for too many years. Though sometimes that greed itch, you get very greedy with markets. But let's get into the enough about me. We'll tell the stories. And you'll see a lot of times what an idiot I was. And because a lot of times in markets, you're going to feel like an idiot. Like I saw something that was obvious and I missed it. And there'll never be something as good as this again. Right? So the very most famous one. That's a great image there anyway. And I'll start with the most famous one. But it's sort of, I'm going to go through these and it'll be like a story, what I did, and then what I learned from it. Hopefully what you can learn from it. So we got to start with Bitcoin because it's sort of one of those generational ones. Anyone who was in markets saw it. So there's a picture of me talking about Bitcoin when it was like $200. I was a TV channel in Chicago. I don't know what I was doing there, but I was younger there. Anyway, I first wrote about Bitcoin when it was at $5. Not about buying it or anything. It was just, when it was at $600, I was making videos a lot of times on Forex Live. Why it's going to hit $10,000. There was the very first one. It says, "What the hell is Bitcoin?" When it was at $5. I didn't make any money. I made some money on Bitcoin along the way, but I didn't buy Bitcoin. I never believed in Bitcoin, right? And so part of it is just knowing yourself. You asked about how do you find something, where do you start? A lot of people just didn't like finance. They didn't understand anything about finance. And I think these are the people who bought Bitcoin. It came along. It was something new. They could kind of understand it, and they bought some. And then, of course, it started going up, and then everyone becomes a big fan, right? You love something when it's making money and become tremendously wealthy. But Bitcoin doesn't bother me because I never really believe it. I still don't really believe in it that much. I saw early on when I was writing it was going to go to 10,000. That's a 20x trade there almost. Is that it was very useful as a money laundering tool, moving things across borders, staying out of the financial system. And when I was writing about it early on, it was, wow, this is a very useful tool for this. And I think that's a pretty big market. And I think that's enough to take it to 10,000. I didn't realize that market. Then when it combined with this snowball effect and interest in it, all the way to $100,000, $120,000. So this is just a huge opportunity that was sort of there the whole time staring at me. And at times, yeah, you meet these guys. I met this guy in London. I think he told me he had $17 million in Bitcoin. He named his son Elon, too. He's a weird guy. And, you feel this pang of jealousy of this guy. This guy, he was a weird guy. But he had believed all the way. And I don't think he'd sold any. So probably down a little bit from that, but still doing all right. But he had this unbelievable ability to believe in Elon Musk, I guess, and Bitcoin. And it had served him tremendously well. Again, it doesn't bother me because I'm just not that guy, right? You have to sort of understand who you are. If you're the guy who can just believe in Elon Musk, that he's going to put someone on Mars, like, invest in SpaceX. I mean, that's not, I have some skepticism about that myself. So I'm not going to invest in that. But there's a whole universe of other things out there, and I take a step back and say, well, I've done well. I didn't need to make it in Bitcoin. It wasn't me. So, I was there every step of the way. A lot of these other ones that are coming up really do bother me still. Sometimes you'll miss a trade, it'll bother you for like 5 years when you think of it. And you come back to some of these and you'll hear it in my voice. But that sort of the first big event. Another one, like I say, 20 years, so we're going back some of the earlier stuff. It was the very bottom of the S&P 500. The stock market in 2009. So you can see there was like about 3 weeks there, it went down 25%, and then it snapped up 25%. It's almost reminiscent of the Iran war here, kind of by half, because the market went down about like 12, 13%, and then it's hit new all-time highs. And it felt a lot like that, because things were getting worse. It's a very good time to talk about it now, because things felt like they were getting worse. This war was spiraling out of control, and then the thing starts to bounce back again. And it reminds you that markets are always looking forward, right? There was just this, and it sticks with me about this war. It was about Donald Trump is bored of the war. And it was like some insider report that he's bored of this report. It's bizarre, right? It's absurd. But I think it was true. Like, he just couldn't spin it anymore, and he decided, I want to be out of this war. And I think the market believed it. I think a lot has been happening in AI at the same time. Nothing happens in a vacuum, even a war. That's been bullish. And in stocks, or at this time in the finance, things were gloomy. I don't know if you were there, but like, I remember the Wall Street Journal this one weekend had like a picture of like soup kitchens, like 1930s depression, like everything was going to fall apart. Everybody was scared. And sentiment can be such a valuable tool when you can step away from it. When you're reading it, you feel like, geez, I should be scared. I'm going to be out of a job. Everyone's going to be out of a job. People are getting laid off like crazy. But then you see the market go down, it's sort of reflecting this intense fear. You saw it in COVID too, right? Everything just gets dumped. I remember I was long gold. I saw COVID coming. I was writing about it like screaming at the top of my lungs. COVID, this is going to be bad. It's terrible. I remembered SARS from years earlier. So you got to get out of everything. And I had like bought gold, thinking gold's going to do well because they're going to cut rates, blah, blah, blah. But even at the bottom, gold puked. Like everyone was selling everything. And I got caught on the wrong side of that. Eventually did very well, but it's frustrating. So you're looking for these things in a bottom where, like I said, when we were taking bottoms, it leads into it nicely because it looks really bad. Like it's always darkest before it goes completely black. And that's sort of the nature of when things sort of puke out. And I bought the bottom. Like I could see the things I was buying. Calls on General Electric, which was a much bigger company then, but it seems like this solid corporate America story, and the S&P 500. And again, I think about it now. I think I made 20 or 50% on both of those in a couple weeks. And I think of it as a mistake. You get this very greed, and if you can pick a bottom, 25, 50%, like it's a heck of a trade. But the market, the S&P 500 bottomed at 666. It's at 7,000 now. So you're up like 12 times. You just buy and hold. If you can get in good and get in at the right time, buy it and hold it. Sort of, I'll leave it at that. I'll get behind here. Okay, the Swiss franc is the next one. I don't know if you guys remember this, but this was a huge event in the foreign exchange market. I'll have two stories about it. So the Swiss National Bank set a ceiling on the Swiss currency. They said, we're not going to let, everybody was investing in Switzerland in the financial crisis and the European crisis. Europe was going to hell. Switzerland, has no debt, the richest country, and money was just flooding into Switzerland. And they said, no more, we don't want our currency to go any higher. So they set this floor on the euro against the Swiss franc at 120. So if you think, you've got to flip it over. This is the euro against the Swiss, so picture it inversely. It's 120, they said it won't go below 120. The euro won't fall below 120 against the Swiss franc. Open currency manipulation. And they set this line here. And early on, this was the day of it, so we're telling war stories. You know what, we should just buy it at 120. They're not going to let it go below. And the interesting thing about when you don't want your currency to strengthen, it's easy to weaken a currency because you just dump your own currency and print it. If you want your currency to go up, that's a much bigger problem because you can't print it. Anyway, so I think this is going to hold. Buy it at 120. And this became a good trade because you could buy it at near 120 for a while. And it would go up to 123, 125. And they had this floor under the euro and Swiss franc for 3 years. It held. And what happened was eventually they had to pack it in. And they gave up on the trade. They gave up on this floor because the pressure on it was unbelievable. The money was just flooding into Switzerland. And what I didn't realize at the time is that this became tremendously crowded. Everybody was buying it at 120. Every retail trader was buying it at 120, selling it at 122. And they washed, rinsed, repeat for like 3 years. And people were they were getting more and more leveraged up, right? Because if this works at 1-to-1, okay, you're going to make 2-3%. If you do it 100-to-1, you're going to make 200%. And suddenly people were 200-to-1, like they were just buying it at the very bottom and leveraged up. And then the ultimate rug pull, January 15th, 2015, the Swiss said no more, and the currency goes from 120 to 85 in 17 minutes. So this is sort of the value of an entire economy down 30%, and everybody's levered up 200-to-1. And it was just like I got a call in the middle of the night from a guy I worked with. I shouldn't tell this story, but he got obliterated on this trade. He ended up owing the broker, I don't know what it was, but it put him in a real tough spot. And that's when brokers started to come up with this negative balance protection. You'll see them even advertise you can't go below zero. It was because before a lot of people went below zero. And it took out all the brokers as well. So a lot of brokers went belly up that day. And they got in trouble with regulators because they were over it. No one thought this could happen. So it was one of those things that really blew up. But the story for me, or the lesson, it was the day it was happening. So I got woken up at 2 a.m. and we're still going and we're writing about it. And you started to hear that brokers were in trouble. And you could picture it too, right? If all your clients owe somebody $1,000 or often many thousands of dollars, the broker is going to be on the hook for that. And I could see, okay, which brokers are going to have exposure to this? And I was looking at FXCM, which is a huge broker. They sponsored everything. And they were a publicly traded company. And I started to hear rumors, and it was 2 or 3 in the afternoon U.S., so there was a U.S. traded company. And I thought, why don't I buy some puts on this company? And I was looking at these puts, and they were 11 cents or something. I was writing about it there. It shows my text messages when I was, hey, should I do this? And the guy I was texting with, though, he was in big trouble. Anyway, the next morning, and I had it on the screen. For it was $10,000. I was going to buy some puts, thinking something's gone. This brokerage industry's in trouble. Wake up the next day, or even maybe it was just after the close, and it said this company, and the shares were trading at $12. They announced they were insolvent. So the company went from $12 to zero. And the $10 puts were at 11 cents. So they went up 54 times overnight. So the $10,000 the next morning was worth $500,000. And I was sitting there thinking and I thought about the trade for 15 minutes. And then there's so much going on, these headlines. Didn't pull the trigger. And that stung for a while because it was I think I even had the order in and didn't get filled. I just needed a little more liquidity. Maybe paid 12 cents instead of 11, They said, don't be a dick for a tick is an old saying, I didn't want to pay 12 or 13 cents for those puts. And they ended up going to $10 overnight. Um, that was it's just a very painful sort of war story. And I think the lesson in it is, and I think a lot of what I actually do well is sort of within these storms in markets are these huge opportunities. Like, right, whether the peak of the war, the peak of the fears, the peak of COVID, these huge opportunities, you just take a step back, take a walk, think something through, adjust your risk. Maybe it didn't need to be 10,000, maybe even if it was 1,000, that's still 54 grand overnight, right? Like, just get at least a taste, then it wouldn't have hurt so bad afterwards. So that was a real war story to me. Yeah, there it is. So I just regret not thinking longer. Here's another one. So I'll go through this one quickly, but this is sort of like the nuts and bolts and the signs. Like, you're looking for signs that something's going to happen. And it was the Bank of Japan, that they were going to kind of change their stance and do QE. And just before they did, I'm talking about, it was weird, their national pension just said, we're buying a bunch of foreign assets. And someone had tipped their pension on the shoulder and said, you need to get out of Japanese yen, because we're gonna yank this. And they sort of announced it, and then the next day they said, okay, we're going into QE. So a lot of times, and they always sting afterwards. You get these signs that something's about to happen. You can see the chart there too. It was sort of teed up right where it should happen, kind of poked through, and then it does. And again, it was 109 to 120 in 6 weeks, so a pretty huge move. It was one that was hard to get into if you didn't get it right. Well, this is a good one. This is Brexit. This is one of our finest moments. If you guys remember this is Britain leaving the EU. Huge move in the currency. And nobody expected, the polls were all wrong, that they were going to leave the EU. And so this is what we do really in real time. So you get sort of this real-time thinking. I don't know if this came out exactly right, but I'll tell do I have it on the next slide? Yeah, okay. So we're writing about it, and what really worked that night is we had a model of every constituency. So the UK, you probably have the same thing here because we have parliamentary democracy. It's all into little districts or constituencies. We call them ridings in Canada, and they're areas, and votes come from each one of those. And we built a model of every one and how it would be expected to vote. And what happened early in the night is all the votes from London came in, and London was very much Remain. So you could see on the full tally, it looked like Remain was like 55%. So they're winning, or even 60%. Remain is looking good. The pound, this is sort of a pound trade. So Remain's looking really good. Everyone's buying the pound. No problem, this Brexit thing's going to blow over. But you're looking, say you look at central London, and it comes in at like 65% Remain. That looks good. But our model is showing it should be like 72%. We're thinking, well, that's odd. And then you're sort of going constituency by constituency, and it's saying like, this isn't going the way we thought it is, but it's, it's 1, it's 2, and suddenly you have like 4 or 5 times, and we're sort of writing about it. The pound hasn't gone down at all. I'm writing, the chance of leave is at 68%. I'm kind of weighing the model. And then I'm saying if 142, this is over. Like this is, I'm telling you, once these rural ridings come in, it's all going to flip. Because the tally was all London, and it was skewed. And so you're taking in data in real time a lot of times, and you just got to pull the trigger. I think a lot of, it's just sort of that laziness we talked about in the last presentation, just being in the moment, being open-minded, and by morning it was at 128. This is just a massive, massive move in the currency that was dead obvious, and I think on that day, it was Forex Live then, I mean, I had the phone ringing, it was like people thanking me. We made so much money on this, and there was just an insane amount of money to be made on just that. And I was in part of it. I was actually working for most of it. But, yeah, we called that one. Again, similar sort of one. It's an election on Trump. It doesn't always work on an election, but the lesson, we sort of sniffed it out pretty early that it was going to be Trump winning. And if you remember, markets sort of panicked on Trump, right? Because we sort of priced in Hillary Clinton winning. This is 2016, Trump 1.0. And what people didn't get right away, I don't have too much time to talk about this, is that Trump won, but Republicans won as well. So it was like Trump won the House, the Senate, and the presidency. And so they had total control over the U.S. government. You think like, wow. And by the end of the night, the market was sort of freaking out because Trump is a bit of a wild card, right? But also, you have Republicans in charge of everything. They're going to cut taxes. They're going to cut corporate taxes. There's going to be a huge boom in the stock market. These guys are business friendly, but more anything. Nobody seemed to realize that, and you can sort of see it by 2 in the morning. I'm writing, I see a future of unbelievable deficits. The U.S. growth is going to strengthen. And by the time the market figured it out, 12, maybe 24 hours later, really over the course of a few weeks, the stock market just started to go straight up. And the dollar is along with it. So it was a heck of a time for us. Next story, and this is the one I think a lot of people know me for. I was famous for it at the time anyway. I said oil was going to go below zero, and this was 34 days before it happened. I said there's a very strong possibility oil goes below zero, and I bet on it. I shorted oil companies, the struggling ones at the time, to zero. And it was fun when the puts go to zero. But, honestly, people were mocking me when I was writing it. And it was crazy when it actually even happened. And this one, again, it's just about knowing a lot of markets. And I'll tell the story because I can tell my thought process and having been in markets and staying in the game, which was something that I talked about. Because I'd seen natural gas prices go negative. And that's what gave me the conviction. And if you think of an oil... People just couldn't believe it could go below zero. But if you have someone who's trying to sell you crude oil and you don't have anywhere to put it because demand had fallen 35%, you just don't want it. If someone comes to your house with barrels of oil, they're trying to give it to you. You're like, I don't have a place to put this. I don't want it. And they say, no, you have to take it. You said, you take it. I'll pay you to take it away. You can't fill your swimming pool with oil. And I really just understood that when there's a massive disconnect in the amount of oil that was being pumped, that it could go negative. And they laughed at the time, made some money on that, and it happened. And this is sort of the later part of it. This was at the time the biggest trade I'd ever made. And it was oil again. COVID had so many opportunities, right? You're in these crises, you have to really dial in and make good decisions in a crisis. And I remember talking, he was like my trading mentor, and he was freaking out. He's like, I'm freaking out. I'm thinking, I'm going to just settle down, and it's not going to be that bad. Let's just make some money. But and this guy was an unbelievable trader. So people were freaking out. And this was April 2nd, so if you remember, this is 3 weeks really into COVID when it got bad. And a lot of what I do anyway is just watching. Like I said, I write real time about markets. So it's just watching markets. And this was just watching CNBC. And then one of the anchor comes on. He said, President Trump just called me. And he said, Saudi Arabia and Russia are going to cut half their oil production. Right? So this huge glut of oil is going to turn into, not so bad. And a lot of trading, unfortunately, like that mentor I was telling you about, when I first started, you could just sit and watch the headlines on the ticker. It was like non-farm payrolls is good or this is good, and just buy and sell. And it was a glorious time. And he was sitting there. He was making $100,000 a day just doing this. Just just sit, stare at the news wire. Good news, buy. Bad news, sell. And that it lasted a good 3 years. And I had nothing. Then I was trading it a little bit, but just learning. And then the algos took it over. You can't really do that anymore, unfortunately. Maybe in a lot of markets you still can, thinly traded stocks, but it's tough to fight the algos. But this was a weird one because it was Trump. He called in on TV. So if you didn't have TV, you didn't see it. The algos didn't pick up on it, and I did. And was watching it live and just bought oil, with everything I had, and made a huge amount of money on it. And it was just a simple... being ready, watching, and trading. And these things come along once in a while. And I think that's why I say stay in the game. Just be ready. Know what to trade when you hear something like that. Be able to log into your account quickly and just hit the button. It couldn't be any simpler than that. And that was just a beautiful example of that one. This is an interesting one. So they wrote about it in Market Watch. They picked it up on Forex Live. So that's the Wall Street Journal site. This analyst says... And there was the article I wrote. This was really early on in COVID as well. It was just the simple case for buying everything right now. And it was. I mean, everything went up like tremendously, but people were scared. It was still a scary time in COVID. It was coming back around. I actually remember South Africa a lot because does anyone remember this woman here? She was like the head of the health department, and she was on saying like, it's not so bad. And she was, she was weird because there was a lot of disbelief about it because I think it must have hit here early. And she was just like, and everyone was like, is she crazy? But yeah, like nobody believed everybody was very confused and scared. Yeah, what was her name? You remember her? Anyway, that was actually one of the tells that it wasn't going to be that bad, but I wasn't exactly thinking that way then. It was more about realizing that a huge amount of money was being thrown at this. Interest rates were being cut to zero. I think people who are new in trading don't recognize the power of central banks. If you cut borrowing costs to zero, like it's very easy to make a little bit of money. If you can borrow at 0% and you can invest in something that's making 2% and you can leverage that up, like everything starts to look like a good investment. And it was really the lesson of that article. It's like these guys are printing money. They're throwing money at everything. This party's just getting started. Guys had promised to hold rates at zero for like 3 years. It ultimately created a lot of inflation. So the lesson was just the power, and it'll come up again. Unemployment was hitting 20% at the time where people were talking about it. But fiscal policy, government spending money, it's a very, very powerful thing. So, those are some of the stories I'd love to tell. I could go on about any of them. And just some of the sort of axioms that I think are worth remembering. About making plans. About feeling hope is an interesting one. If you get that feeling of hope, and we talked about emotions earlier, hope is a dangerous feeling to get. It usually means you're on the wrong side of the trade. You want to have conviction. So strengthen that conviction muscle and really live to fight another day. If you think about that Bitcoin trade, like, I missed a lot. It's kind of screwed up the COVID bottom a little bit, even though I was on it. Then caught, one headline here or there. And you'll get like the opportunities never end. Like I said in the other one, I think I'll say it in every presentation. There's always going to be another trade. That's 20 years. I did 10 stories. I could do like 1,000 stories for every event. Like I was there. I mean, it's all documented what we were doing, what I was writing about. I could do 10 stories on the Iran war alone, and how frustrating it's been. But there's always another trade, right? You think this is going to end. There's going to be another trade. Just remember, there's these lessons. If you can stay in markets, there's going to be another trade. So those are my presentations for today. We have 10 minutes for questions here. If there's any questions, happy to talk about stories or trading or any events. Yeah, I think we've got a man with a microphone there.
How's it? How are you? Sorry, I got a question from your previous presentation. From a previous presentation, apparently there's a lady who asked about beginners. What platform is it there for beginners to learn more on how to trade?
Right.
Or the pointers on how to trade, just from a beginner's point of view.
I should have done some more beginner presentations. Okay.
Yeah, I think you say that you are the best, but you never mention a couple or one or two. I'm quite interested in that.
You're interested in, pardon me?
In knowing like a platform on how to learn, how to trade from a beginner's point of view. Because I haven't traded before, I want to start.
Having never traded before,
yes,
where do you start?
I want to know all the basics, all the little nitty-gritties that I can pick up from there.
Part of me feels like I'm just so far removed from that. Where do you learn the basics, right? Like a lot of it start with what you're interested in. If you're interested in technology, you don't need to learn about but just for anyone who's listening, if you're interested in technology, you don't need to learn about central banks like that much, right? You need to know about technology. If it's macroeconomic, you're going to need to learn. It's not really as complicated as you think. I guess that would be my message if you're learning how to trade. And we talked about people on TV before, because I am on TV. A lot of those clips are from me talking on TV, like been in these places. And talking with people in markets is this big dick measuring contest where they try to talk over each other's heads and make everything sound very complicated. And sound like, if I talk about it as if it's complicated enough, I'll sound smart. And then it's sort of, this guy's really smart, I should invest with him because he's using a lot of really weird words. The people who are good and the people who can help you can simplify things. So if you're finding someone who's trying to teach you how to trade and they're overcomplicating things or they're making you feel like you don't understand, that's number one, probably not a very good teacher. And number two, not something you should really get that deep. Don't follow that path. Find something you understand, some market you understand, and just build out from there. Ultimately markets do two things. They go up or they go down. And so you have to find out why, whatever market it is you're interested, why it goes up and why it goes down. And you can study a bit of the history of it and see some of these things. There's always going to be a different weird set of circumstances. The history's nice because it repeats a lot. I would maybe even have an illusion about just study. If I could just study one thing right now, it would be sentiment. Just look at sentiment. If you get people, there's always these famous stories about the shoe shine boy giving me tips on the market, and it was J.P. Morgan a million years ago saying, this guy was saying I needed to buy the market, and it felt wow. And even the shoe shine boy is doing it everybody knows sentiment's too crazy. Everybody's already bought it. So I think one of the first muscles you want is just try to understand what everyone's thinking, and then kind of go the other way. Right? And everyone hates something, or everyone loves something. God, that's not great advice, but from your question about, I would kind of start really with the basics. Just read Investing Live. We kind of teach in real time. I'd say that. Others? Good? Yeah, my man here in the front. A well-dressed man in the front.
I have so many questions, but I think the one would be, a lot of people anticipated that gold being a safe haven asset when the Iran war broke out. Some people anticipated gold would go up, dollar would go down, but it did the opposite. What is your opinion on that, and how do you foresee?
It's an interesting one. Gold, I love talking about gold in South Africa, but gold's a chameleon. Some people, gold is interesting because you can talk about a lot of assets and they'll go up. There's it changes, but it doesn't really change. When growth is good, the rand's going to do well, or the Canadian dollar, or whatever. Gold is a chameleon. Some people. There was a lot of time people were just tracking real rates, and they'll do a chart overlay, and gold was sort of following that. And I was writing about that as nonsense because then it broke. But gold will trade on certain themes for a long time, right? So gold really started to go up at the start of the Russia war in Ukraine. And America putting sanctions on all of Russia's assets, confiscating essentially its dollars, right? So Russia had its dollars confiscated from the financial system, not even in the U.S. And then a bunch of countries said, I don't want to get my assets confiscated, so I'm going to buy gold. And then it starts going up, though, but then retail gets involved and sort of drags it along. And then if you get to Venezuela earlier this year, that's when it hit all-time highs. So you have U.S. attacking country, things going up. And it's destabilizing thing. But then we get the Iran war and it goes down, right? So two things happen. One, it became kind of crowded, which is when I talk about sentiment. And people said, there's this weird war going on. I'm getting out of everything. Because the secret of markets is everybody's way over leveraged. It's like that Euro-Swiss trade. I didn't realize everyone was 200 to 1 on this line with their full account. The leverage in financial markets is crazy right now. When something gets hot like gold, it's people don't just own gold. They own gold at 20 times leverage. And so when things start to get weird, everybody gets out, and then even good assets go down. But the number two thing about gold is that this became more than just an investing event. For places like Turkey, they import huge amounts of oil. Turkey, as a fairly wealthy country, has massive reserves, has a very weak currency, and they try to keep the currency up, and to pay for the oil they're importing, they had to sell their gold reserves. And there's this fear in the market even now that if oil goes to 200, that there's a lot of places in the world that can't afford oil, and they'll need to sell their gold reserves to pay for the oil. And so when the war ends, we're going to see gold go up again, because there's this huge tail risk that if oil stays high for long, and I've been writing, nobody's been writing about this till recently, really, that once that risk goes away, because once you strip that all away, you have America sort of losing a war in the Middle East, really screwing it up, dollar dominance sort of falling apart, everyone thumbing their nose, Trump looking like he has no plan, and the whole globalization system falling apart. It's all bullish for gold. I'm a huge gold bull, but I think it's one of the best trades when this war actually ends. So I think that's why it's happened. It was really tough to call in real time because there was this knee-jerk, it hit all-time record on Venezuela, just buy gold, and then markets puked it all out. We're going to talk a lot more about gold tomorrow around this time. I'll have a presentation on a lot of the convictions I have and why, and what's happening in markets. Any other questions? No? Sorry. Oh yeah, over here. No? No. Oh, maybe over there.
Thank you so much for presentation, Adam.
Appreciate it.
My main question is, at this current instability of the markets, do you feel your positions and actually being into the positions, time for that, is increasing, or you tend to be in the position less at this current stage? So, for example, when you enter the position, the trade, are you thinking of macro, you're waiting for like a few months before the trend to unfold, or you try to minimize the exposure and the risk into the trade, and you try to operate within like a day, within a few days?
It's really a question of timing, right? Is what you're asking. A lot of times you develop this conviction that something's going to happen. Right now, I'm getting a little more conviction that inflation's going to be a problem. But when do you make that trade? And then how patient can you be once you're in it? Because it can go both ways. I think ultimately you have to be early and in smaller size than you would like, and then add to it. Timing it, even like being right is hard. Being right and on time is almost impossible. So you have to either choose whether to be late or early. And early can be like wrong, right? Because things can happen before it unfolds. I'll talk about a lot of trades around those themes. I've been talking about copper I talked about copper here. Now it's at all-time highs, but it took a while. It might not be months, it might be years sometime. I'm making trades right now for 2030. And I think like things that are going to happen in 2030, and I'm prepared to wait until then. So I think before you get into a trade, you have to, whatever timeline you have, you probably want to double it and position size accordingly. In times of volatility, though, you can get shaken out. Iran war, it can just become a total game changer. So, it argues for trading small and just being able to tolerate that volatility. I talked in the last presentation about visualizing the pain that's going to come along with the trade and saying, like, and knowing that it's going to be a painful position for whatever this time is, or I'm going to have to wait, at least a patient position, rather than thinking about sort of the ultimate end reward, and that'll help you stay in it. It's sort of like that trade at the bottom of the 2009, where, I made a lot on calls on General Electric and the SPY at the bottom of the financial crisis. It was a good trade, but I would have been much better off just to buy the index and wait, 5 years and double, triple, 10x my money.
I'm sorry, and on that, just to elaborate, do you supplement more aggressive trades with kind of just buying into the index, the bonds, the more usual conservative stuff?
Yeah, I hate being in all cash. There's usually some way, you kind of like, a lot of it is just getting in the right frame of mind. If the market's up 25% this year and I'm up 2%, like I'm not going to be in a good frame of mind. So you want to at least have something that's close to the index. It's okay to underperform by a bit. A lot of what I do is wait for headlines. So you are waiting. Sometimes, like I said, it bothers you when something goes, and sometimes it doesn't because you don't believe in it. Like Bitcoin, for instance. Like it didn't bother me that much. A lot of things, Intel's going up like crazy right now because the U.S. government took a position, and I'm just like, I could have bought some of that. I did at one point, but like I don't really want to hitch my horse to that. So you just try to find something that works and you believe in ultimately, but you don't want to fall too far behind because you'll make a bad decision. That's about it. Well, thanks so much for everyone for coming. I hope it was enlightening and maybe a little bit fun. And I hope some of those lessons will come back to you in the next crisis, whatever it is, or big opportunity. Big thanks to Finance Magnates for today and our host here. Thanks for coming out, and hopefully we'll see you some of you tomorrow. And I've got 2 really good presentations, I think. You're going to have a lot of great lessons. So thank you very much.